नवरात्रि के पहले दिन से देश आत्मनिर्भर भारत अभियान के लिए एक और महत्वपूर्ण और बड़ा कदम उठा रहा है। सूर्योदय के साथ ही नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लागू हो जाएंगे। देश में जीएसटी बचत उत्सव शुरू होने जा रहा है। हमारे देश के गरीब, मध्यम वर्गीय लोग, न्यू मिडिल क्लास, युवा, किसान, महिलाएं, दुकानदार, व्यापारी, उद्यमी, सभी को ये बचत उत्सव का बहुत फायदा होगा।
We saw the Prime Minister address the nation one day before, September 22nd, where these next-gen GST 2.0 reforms actually kick in. Now, remember, this announcement was actually made a couple of weeks ago, but it is effective from tomorrow. A particularly big and significant time coming in for all of India. And as the Prime Minister rightly said, we're going to be seeing a lot of savings, all of this effective tomorrow. It's going to be beneficial to businesses. Let me quickly get in my colleague and managing editor Tamanna Inamdar on the phone line. Tamanna, we saw the Prime Minister come out and give this mega address to the nation one day before the GST 2.0 next-gen reforms kick in. Definitely a show of strength coming in from the Prime Minister and also kind of lifting spirits for the Indians that are watching.
You know, the Prime Minister's address on the eve of the rollout of the GST reforms is very, very crucial, Sanjana, because it shows and displays full intent of what the government is trying to do. What also struck me as crucial and a central part of his message in that speech, which was just about 20 minutes long, was the fact that he talked about buying Swadeshi, a boost to Indian manufacturing, and that there should be a move towards Swadeshi, made in India products, which supports MSMEs, both in Indian homes as well as stores. Now, Atmanirbhar Bharat is something that this government has been focused on from its first term itself. The context of talking about buying Swadeshi right now becomes very, very crucial. We are in the middle of a tariff war. We've just seen the latest attack literally on H-1B visa workers and holders. Not all of them are Indian, but 71% of them are. And in that context, the focus to bring back on buying Indian becomes crucial. And I think that's one of the important things that the Prime Minister spoke about that really came to mind. Also, he talked about how this is going to make the new middle class and their lives easier. So the distinction that the Prime Minister has made on a measure for the middle class, which was done with the budget that made all income up to 12 lakh rupees tax-free. That was a big boost to the middle class. He's now talking about the new middle class. And carving out this section of society from a policy framework is something which is truly noteworthy. This is a focus on the aspirational Indian who's not yet middle class but wants to get there, or is newly minted as middle class. So what does that mean in terms of the actual rollout of GST? This is the focus on making things pretty much tax-free or in the 5% bracket that you use every day. So the examples given were toothpaste, toothbrush, soaps, etc., food items, and medication. All of this has been made very, very cheap and more affordable. It also shows you that right now the government is hell-bent and completely, putting its mind to boosting consumption in an economy which is consumption-led. We are a domestic-led, consumption-led, services-boosted economy. And that becomes important to do at a time when we don't know what's happening with the trade war and our export-oriented sectors.
Tamanna, and this is as India gears up for this very landmark economic moment that we heard from the Prime Minister declaring tomorrow as what he was calling the start of GST Bachat Utsav. So what he's trying to do is, announce this nationwide celebration of savings and relief for Indian families. And in his address, the Prime Minister also hailed these GST reforms, like you rightly said, and expanded income tax relief as a double boon. Let me quickly bring in my colleague Shrimi, who, broke the story first on NDTV Profit, has been tracking it relentlessly since. Shrimi, we're seeing, the promise of more money in the hands of citizens, new momentum for household consumption, and another bold step towards a prosperous, developed India. Like Tamanna rightly put it, the government is very, very clear about spotlighting these reforms as a show of confidence and delivery, positioning India's response to all of these global economic headwinds and people-centric policies that are simplifying taxes essentially.
Absolutely, and Tamanna summarizes it all, but I want to kind of highlight two aspects here, which Prime Minister said. One, on the saving part, that how much amount it's going to save from, Monday onwards, from the first day of Navratri, 2.5 lakh crore is the saving, is what he highlighted. If you take both GST cut and income tax cut into account, it's going to be 2.5 lakh savings is what the amount is. A big amount which he quoted in his speech. And in fact, if you remember in the budget, government has made an income tax cut up to 12 lakh, and that is what he's referring to along with GST cut. The second important point actually he highlighted about the complex structure of the indirect tax regime pre-GST era. Now, pre-GST era, we have multiple taxation, right, from your, VAT and state tax, etc. And in fact, the GST has brought and subsumed 17 multiple taxes into one. And that is also one of the highlights of the Prime Minister's speech, talking about that how this entire GST regime made the entire indirect tax system very simpler, and it tries to kind of review it since its inception, 2017. And in fact, we have seen now GST 2.0 with only two slab structure remaining, the 5% and 18%. And in fact, he also emphasized the fact that how the states should come forward, should do and focus more on manufacturing, so that it will give a overall boost to the economy. And do remember that Finance Minister Nirmala Sitharaman recently said that this GST cut is going to boost the consumption for around 2 lakh crore again. And Prime Minister reiterated the same thing, and saying that the income tax also, if you add that, will go to the hand of saving of around 2.5 lakh crores. So that's a huge amount which is coming, and which government is expecting at this point of time. And from tomorrow, you would definitely see that lot of items, Sanjana, which were there in the 5% category is now exempted. Your paneer sort of stuff is now exempted, your milk is exempted, and those which were in the 12% bracket is now much lower to the 5% bracket. And of course, your aspirational goods like white goods, etc., they are coming from 28 to 18%. That's also huge cut. In fact, the government from this GST cut tried to sort of reduce taxation on at least 300 plus item, and try to also sort of balance somewhere to put some taxes in the 40% category, especially your high-end items. So that balancing is of course going to reflect in the consumption and also the savings for common people, for sure.
Shrimi, I think another very notable announcement that was made in this speech, and what I'm looking at is a flex really, was the Prime Minister's appeal to go for everything desi, to look at more homegrown items. And I think this is particularly important given in the light of the H1B announcement that we saw yesterday. The Prime Minister coming out on a Sunday, and spotlighting this. And now let me actually widen this discussion, and to have more kind of insight and analysis on this, I'm joined by Gaura Sen-Gupta, Chief Economist, IDFC First Bank. I'm also joined by Sachin Shah, Executive Director and Fund Manager, MK Investment Managers. Dhananjay Sinha, Co-Head Equities Head Research, Strategy and Economics at the Systematics Group, and Yatish Rajawat, CEO, Center for Innovation in Public Policy. Good evening, and thank you to everybody for joining us on a Sunday. Welcome to NDTV Profit. This is a big announcement coming in from the Prime Minister. Gaura, I'm going to come to you first. We're looking at GST and income tax relief together, empowering India's middle class to save more and boost consumption. How are you looking at that in the next coming months?
Uh, Definitely, it's a good reform. It will help durable consumption, and the timing is also very perfect. It's just before the festival season, so the impact is maximized. And from initial reports, it looks like that with the government push, it looks like that there could be a good pass through of the tax cut to the consumers, with many FMCG companies, companies indicating lower prices. The government has been also very clear that there should be a clear communication of pre-post GST tax change, the new prices, so the consumer is also aware of the benefit. So this comes at a very opportune time. It's timed perfectly with the festival season. And as you mentioned, it comes at a time where we are facing a lot of challenges on the external front, especially with our trade relationship with the US, which currently has been focused on the merchandise, where we are facing very stiff punitive taxes of 50%, and now it's threatening to go into the services side. So yes, our focus is on boosting domestic consumption, and in particular, consumer durable consumption will get a support from this measure. We expect GDP growth to get boosted by around 0.6 percentage points over a 12-month period through the lower taxation rate.
Okay, Gaura, let me actually now come to Sachin. Sachin, the government has frontline relief for consumers and businesses. This is something that I think, my colleague Shrimi stressed on. We heard that from the Prime Minister as well. How significant could this be for India's retail demand and investment flows going forward, especially with the festive season around the corner?
Well, I think it's an extremely well-timed regulation which has actually happened. It's a reform, actually, if I can use that word. And because we've seen that there has been some challenge as far as the consumption is concerned over the last probably 12 to 18 months. And we believe that this is actually a game changer because this GST cut is very, very real. There is absolutely no cosmetics in it. There's a genuine GST cut across products, across services, and in some of them, it's like, say, for example, your insurance policies, just getting rid of completely 18% in one stroke. I think that's a master stroke. So we personally believe that this is really one of the best things that has happened for the domestic consumer. And I'm sure there's going to be a significant amount of reciprocation from the consumer side. So we believe that you will see a stock out kind of a scenario in the next couple of months, maybe 6 to 8 weeks. That's the kind of the boost that we are going to see on the consumption side.
Sachin, but I'm going to stop you there, and I'm going to ask you as early as tomorrow, right? Given these reforms, are we likely to see this as a positive catalyst as early as tomorrow?
See, since the time this announcement happened on 15th of August by the Prime Minister, and obviously after that the policy came out, I think markets have already reacted quite positively. We've already seen 3 consecutive weeks of positive change. In the last 1 month itself, or last 1 month itself, we are up 2%, and the Nifty levels, Sensex levels. Or even if you take last 3 months, now you're up 3-4%. So we've already seen a decent move, but our sense is that this is a trajectory change, and the positive trajectory will continue over the next probably 2 to 3 quarters at least.
Dhananjay, I'm going to come to you now. We're looking at these reforms coming at a time when global headwinds persist. We actually saw an announcement made by US President Donald Trump yesterday on H-1B, which has been unnerving for not just the sector, but I think so many droves of Indians. How important is this particular step, especially given the Prime Minister's announcement coming out on a Sunday for sustaining India's economic momentum and, of course, investor confidence?
I think the number one thing that we have to notice is that, the announcement of the GST cut essentially comes after the US actually imposed a 50% tariff on India, including the penalty of 25%. So in a way, it was a way to sort of rebalance some of the adverse impact that it would have had on Indian export and Indian economy in general. I think the restriction as far as H1B visa is concerned, I think that has to be looked at in two ways. One, how does it impact specific sectors such as IT and other sectors where highly trained people engage from the Indian side. The second thing is that it broadens the aspect of protectionism that US has adopted from commodities from goods to services. So essentially, our initial view was that the services sector has been spared. I think that is no more the case. So I think the 50% tariff plus the restriction on IT sector essentially means that our effective tariff is much higher. Now, looking at the GST reduction that the government has given, the government own estimate is that the overall tax foregone would be roughly about 48,000 crores, net of the increase that they have done on high-end products where the tax imposition is 40%. So that is about 0.2% of the total consumption. I think people were also estimating that the foregone GST cess would be roughly about 1,50,000, so total about 2 lakhs. So various estimates are there. So there is uncertainty around it. But I would say that if we go by government estimate of 48,000 crores, it's far too less. So I would say that the key issue that the Indian consumers have been facing, and we are seeing that reflected in volume growth of a lot of companies, is that the volume growth has been roughly in the region of 2 to 3%. If you look at the FMCG companies, there is a certain amount of inventory built up in the auto space, and there is a significant buoyancy that had happened on premiumization story with respect to auto. So that is kind of waning. So I think the expectation is that with a reduction in the GST rates, especially for automobiles, that will be a significant move in terms of how the sector can respond by way of volume recovery. I would say that the price elasticity with respect to tax reduction and volume growth is not so significant with respect to staple goods, because there the price elasticity is very little. So I would say that value-added product, some premium products might actually see a much bigger response, including passenger cars, two-wheelers, EVs, etc.
Right.
I think where the responses can be significant.
Yatish, the government's message is one of delivery and support for every household. How does this kind of direct relief then improve public trust, social stability, especially during what I think we can all safely call our uncertain times?
So, I think the more important message was in the second half of the Prime Minister's speech, which was not focused on the taxation, but was focused on Swadeshi, where he was talking about the importance of the MSME and the importance of MSME not in just today's time, but also in today's uncertain geopolitical relationships where, every country is focusing on their regional producers. We've seen that both in Europe and in US. And, he exhorted people, as he has done typically in most of his national addresses like this, where he is suggested for people to buy Swadeshi. And this is the more important part of his messaging, because here he is asking the normal consumer to focus not only on what to buy, but who is making what they're buying. He gave the example of a common comb in your pocket, which you don't realize where it is coming from. But that realization and that importance of realizing whether you are buying a Chinese product or you're buying an Indian product was the most important part of his messaging. The GST part is occupying your airtime, but you see, the GST has been announced a long time back. He is now shifting the focus from what is the benefit you are, but also on how should you utilize this saving that is going to accrue to you, so that it is going to be in the longer interest on the country's manufacturing prowess. And that is becoming increasingly important. And I think we've not seen we've seen Trump do the same when he talked about making America great again and the importance of local manufacturing there. In the same theme and in a much more important way, Prime Minister Modi is, exhorting the citizens to buy Swadeshi, to buy from the small manufacturer, to focus on the importance of the MSME, because they are the largest job creators, and they are going to be far more important in coming times as these tariffs, or they see there are three trends. There's a tariff trend which is region and regime linked. There is an automation trend which is again affecting employment and growth, and there is an AI trend. All these trends are finally hitting at the large company level. So the only job creators are at the MSCB level, and that is why the Prime Minister is focusing on them, and that is why he's asking people at large to be conscious of their consumption, be conscious where the manufacturing is happening.
Sure,
And
sure.
I think that message has to be taken home.
Okay, so I agree with you, Yatish, and I think this is also something that that we raised as well about the Desi focus, right? And I think the commentary is highlighting the Desi focus even at this point. So, Gaurav, how are we now looking at the GST 2.0 rollout tomorrow, strengthening India's self-reliant growth model and actually the domestic economic ecosystem in that case?
So we are a domestic demand-driven economy. The important part of the GST, which is why it's essential, is that this year and even last year, the urban side of the consumption recovery has been slowing. So urban demand is facing a number of headwinds, which is one is the urban wage growth is slowing. Moment your listed company profit growth slows down, it also results in slowdown in wage growth for the urban sector. The other headwind that is facing urban is household savings rate is at around 18% of GDP in FY24, which is below the pre-pandemic level. So during the pandemic, when we had the lockdowns, household savings had surged to 22% of GDP because people were not spending, you were working from home, etc. And now that savings buffer has gone. So another impact which is sort of impacting the urban consumption is that buoyancy of the stock market that we had for the last couple of years post-COVID, which also helped the wealth effect, and also I would say the consumption sentiment, that has also waned a bit. So this GST cut, income tax cut, they're all aimed at boosting the domestic consumption. And as you mentioned, it's coming at a time where we are facing considerable headwinds externally. Even let's say if we are successful and we are able to get the bilateral tariffs reduced from a 50% to let's say 25%, there's a second round impact that the fact that with all this tariff volatility, it's very likely that global trade, global growth will tend to slow down in the second half of the year. And hence, even if, let's say, we are getting a 25% tariff, which is putting us broadly at par with the other Asian countries, there will still be a slowdown in export growth. And even services, which has been, I would say, very strong last 1 year, it's outperformed the merchandise in terms of export performance. But we are much more, I would say, dependent on the US. For example, software services, 54% is accounted just by the US. Merchandise, the US accounts for around 20% of our exports. So the software side of the services, or exports is far more concentrated and dependent on the US economy. The US economy itself is going to slow. So yes, it's extremely important to boost domestic demand, and that's consumption, which is also key to ensure that investment also starts picking up. For now, that the other weakness has been that the private investment cycle has stayed on the sidelines. So for that, consumption recovery is extremely important.
So, Sachin, in this environment that, Gaura pointed out about the post-COVID market momentum and the GST cuts, sparking domestic consumption and that being the target, which sectors or industries are you believing that will be standing to gain the most from this consumption boost and one can hope renewed investor interest?
Sure, yeah. So, again, if you see the last 6 to 8 months, all the factors that we've been discussing, whether it's in terms of it started with the budget in terms of the relief on the income tax rates. Then, of course, there was a RBI interest rate cut, then again, liquidity. So, all of this, and then now this consumption boost. So our sense is that overall financial services, because the retail lending should pick up significantly, and overall even the health of some of these MSMEs, which was looking like some challenges in the last 6 to 9 months, should now get much better with their revenues also and demand coming back very strongly. So clearly, financial services, particularly on the lending side, we believe should do much better. Second, very obvious, again, like Dhananjay was also mentioning, I think the buoyancy with the auto sector, and of course, even Gaurav mentioned that. So I think the buoyancy with the auto sector should also do exceedingly well. So if you ask, if I have to pick really two top sectors in private, I mean, overall financial services and auto sector should do much better in the next probably 3 to 6 quarters.
As India gears up for a landmark economic moment, we heard the Prime Minister declaring tomorrow as the start of GST Bachat Utsav, a nationwide celebration of savings and relief for Indian families. Now, in his address, we heard the Prime Minister hailing the next generation GST reforms and expanded income tax relief as a double boon, promising more money in the hands of citizens, new momentum for household consumption, and another bold step towards a prosperous, developed India. The government is spotlighting these reforms as a show of confidence and delivery, positioning India's response to global economic headwinds with these people-centric policies that simplify taxes, support daily savings, and empower every segment of society. Thanks so much for joining us, and as we unpack the Bachat Utsav and what it truly means for India's growth story. Thanks for watching.